Welcome to Subramani. Why do people invest in pre-IPO shares, right? Pre-IPO stocks? Simply because they think they are going to get outsized returns. See, whenever there is a element of chance, when there is an element of shortage, that only so many shares are available, minimum you have to buy 1 crore worth of shares, or minimum you have to buy 1 crore numbers of shares, some things like this, then you feel, oh, there is something great about this. Some rich people have bought, so it's a good share to buy. So I think about 10 years back or 12 years back, I was offered the unlisted shares of ICICI Prudential Life Insurance, the unlisted shares of HDFC Securities, maybe 20 years back, even earlier, maybe at least 20 years back. HDB Financial Services, which is an HDFC Bank sales outfit, and many such companies. So recently I was again offered shares of National Stock Exchange, and my only crib is there enough liquidity, right? So first let us come to what are pre-IPO stocks. Pre-IPO stocks are those shares which are going to have an IPO, and therefore they're trying to give you a peek in at the beginning. So it's a good thing, because when you apply in an IPO as a retail investor, you get 10 shares, 12 shares, or not even that. So it's not worthwhile, because the quantity is just too less. And if you cross a particular limit, you go into the HNI category. So again, chances of you are getting is very less. So if you want to pick up, say, 2,000 shares of a company or 10,000 shares of a company, it's easier to do it in the pre-IPO. They are shares of private companies. As of now, they are private companies in the sense they are not listed. They are, of course, public limited companies, therefore they are able to give you. And companies which have yet to launch an IPO, maybe they have not yet launched the DHRP, and they have gone to SEBI, or they have not yet gone to SEBI, or they got the SEBI approval but they have not decided on the timing. All these are the pre-IPO stocks. So companies no longer want to remain private, and therefore they are going public. So once upon a time, long ago, you raised money from the public to run the company, right? So I start a company, I'm a partnership firm, then I become a private limited company, then I become a limited company, and then I need more money. I need more money to expand, therefore I went for an IPO. This is the old story. The new story is, when you need money, you go to an angel investor, you go to a venture capitalist, you go to a second rung of venture capitalist, third rung of venture capitalist. So you've already spent 10-15 years, or maybe 7-8 years, raising money in the private place, right? So you have gone and raised money from all these people, and now your IPO is a public event, largely meant to provide liquidity to the people who have already invested and allowing some new people to come in. So it is a combination of offer for sale and an IPO. So nowadays what is happening is, you cannot get a company at the initial stage in an IPO. Very few people will do an IPO. Either they are big companies like an HDFC Life or an ICICI Pru Life. They did not have come to the public at all, simply because they were being funded by the big companies. So a Jio, right, Jio Financials does not have to come, because Reliance is anyway funding it. They got enough money, and once they are already there in the public domain, but they are in the public domain because they were hyped off. But have they come out with an IPO for raising money? No, they have not come for raising money. However, you have to raise money, because you have to come for the public, because only then there will be value for your shares, whether it is a venture capitalist or angel investor or your own employees themselves or vendors, whoever is owning your shares, they need this, right? So what are the ways in which you can buy shares in a pre-IPO share, right? How can you acquire pre-IPO shares? So one, there is a marketplace already. There is a secondary marketplace. I can go and buy like HDB, right? So which is an HDFC Bank subsidiary, and or HDFC Securities. I can get those shares, or maybe even HDFC. I do not know whether their general insurance shares are available, but yeah, I'm sure it will be available at some stage. So this I'm talking of HDFC. Similarly, IPRU, AMC, IPRU Life, all those shares would have been, ICICI Direct was listed and then delisted, right? So all those things did happen. So all these are good, big, powerful companies. National Stock Exchange. Last 10 years, 15 years, whatever people have been talking about, there is an impending IPO, but it is not coming. For whatever reasons, I'm not getting into that. Similarly, I was offered the shares of a pharma company, which actually triggered this off. That company was offered to me at 106 a few years ago. I don't really remember the dates. But then that company went and acquired another piece of healthcare shit, which I thought was grossly overvalued. So I completely lost respect for that share at 106, and there was no way how I would have touched it. But the only reason why I didn't touch it is because they said minimum you have to buy 1 crore shares. Minimum you have to put 1 crore rupees, so you have to buy 1 lakh shares. So I was not willing to put 1 crore in an unlisted company with the date not known. And then I saw them commit this harakiri, and then I saw the price coming down to some 70 rupees. When it was, then it came down to 35, 36 rupees, and at 36 rupees, one wealth company, very famous wealth company, so I can't name them, was selling it at 70 rupees, and they had the guts and to call me and say, I believe you wanted to buy it at 100, now it is available at 70, nothing much has changed. And I said, no, I've just developed cold feet, I will not buy it at all. So recently it was offered to me again by somebody else at some 10-12 rupees. I have no clue what has happened in the company in the interim period. Obviously the company has not IPO'd, and these shares are still available. These shares are available at 110, the price at which I was offered initially. After that, maybe there has been a bonus split. I have no clue what has happened. I have no clue whether it was a 10 rupee share and now it's a 1 rupee share. I don't know. But again, it was offered to me at 12 rupees, and I said, no, I'm not interested in this. I'm not. So yeah, you can buy it in the secondary marketplace. There is a secondary marketplace where good companies, bad companies are all transacted. Unfortunately or fortunately, in India, it is not yet officially recognized. SEBI does not say that there is a secondary marketplace for unlisted shares. Obviously, it should not be there. But internationally, I think Hive, Linkto, I think these 2-3 names I can think of, but there are 5-6 names where you can go and actually trade in that. So that is one way of getting these pre-IPO shares. Second, of course, is to become an angel investor for a friend or a kid whom you know, a nephew's friend, friend's nephew. All those possibilities are there where you go and become an angel investor yourself. So you would have acquired those shares, but it would take maybe 7 years, 10 years for that share to get listed. And so if you don't have that kind of patience, then that is not a great way for you to acquire shares. There are some funds which are investing in pre-IPO shares. So when you invest in some mutual funds, they can go and put money in a pre-IPO. Now, if you are investing in, say, in a tech fund, you can ask the tech fund manager whether they are going to invest in tech startups also. That is one thing you can do. And I mean, if you are willing to invest abroad, maybe there are more chances. But in India, to invest in a tech IPO startup is going to be very difficult unless you really know many bankers, investment bankers, etc. Then they come to you and make these offers. But that would be at least 50 lakhs, 1 crore kind of a thing. Definitely not less than that. So yes, it is possible. And internationally you have innovation funds. In India also you have some innovation funds. Whether they invest in pre-IPO, I don't know, but if they do invest, that's a one very easy, safe way to get in, because out of the 100 rupees that you put, maybe only 5 rupees goes into these kind of pre-IPO stocks, and they could give very good returns, or you could lose money, but your risk definitely goes down by buying there. Of course, you could always invest in, suppose you had invested in HDFC Limited or in HDFC Bank, let's say HDFC Limited, then HDFC Limited was promoting a HDFC Life or HDFC AMC or even HDFC Bank. So you participated during the gestation period also, because you were funding it, because you are a shareholder of the main company. That is one way of getting it, but that does not mean you get the equity shares of HDFC Life. So not all shareholders of HDFC Limited were given shares of HDFC Life, right? Another thing you can do is sometimes your broker gets a pre-IPO he gets to participate in some of these things, so you could tell him that you could come and please give some of these shares to me. Can anybody invest in shares of a pre-IPO stock? In India, yes, there is no constraint as to what you can do. However, some investment bankers and promoters themselves may have put some conditions saying minimum 1 crore, minimum 1 crore shares, minimum 10 crores, whatever. So we don't have this concept of only accredited investors can invest. Anybody can invest. You have a complete right to lose your money. There is absolutely no doubt about it. How would you go and evaluate a pre-IPO investment? Suppose Swiggy were to offer you pre-IPO stocks. How will you value it? There is something which you can do is you can look at Zomato and say, okay, Zomato, I get this PE, the PE for Swiggy will be lesser, the PE for Zomato will fall as soon as Swiggy gets listed, right? Then there could be other 3-4 companies in the waiting which are likely to come into the same space, right? So then question is how confident are you about evaluating? So to me, evaluating a pre-IPO investment is very, very difficult. So the question yourself which you have to ask for in any startup is why is this team going to be in place, right? So I know when they put together and they all they're in a hurry to put it together, they'll say no, we are in it for good and all that, and after the funding has happened and after the IPO happens, they may just run away. So you have to also have your strategy in place while talking to them and finding out whether they are going to be there for the longer run. And then what is the consumer they are addressing, how painful it was for the consumer before these people come in, how is this company acquiring customers, and how good is this company in retaining people, because it's very crucial that they should retain people. How many of their functions can actually be outsourced? What is the chance that the person who is really the rainmaker is hiding and you can't even see him, the promoter is hiding him? What happens if somebody else comes and gives that person money to do his own startup, right? So all these questions have to be asked, and the question also to be asked is why now and at what price, right? So when Nykaa Labs came and I was offered those shares again pre-IPO, I was just wondering why now? Why are they selling now? Because the promoters were very famous investment bankers. So why now? Why this price, etc. So you start processing all that. Of course, there are some advantages and some disadvantages. The advantages are potentially high returns, but there is also the risk. Secondly, it gives you a little bit of diversification outside buying your Larsen & Toubro, HDFC, SBI, which is there in your large cap portfolio, which is already there. So you can get to participate in some of this. The chances are, problems are, it could be speculative, it could be risky, the IPO permission may not come at all, the IPO permission may come, the market may tank, so you don't have liquidity, it requires high capital requirements, right? It's not going to be something going to be very small. So investing is not an easy task. Investing in private companies is not an easy task, and you have to remember there's a good chance that you will lose a lot of money. Thank you.